How do I maximize the Social Security benefits I expect to receive? It will be greatly determined by your income needs now and in the future, and you and your spouse's life expectancy. Other factors we will cover in this video will be the taxation of your Social Security, the work penalty, and how much may be deducted for Medicare premiums. This video will help you determine how to get the most out of Social Security, raise your check up, keep the taxes at bay, how much Medicare will be, and what the possible work consequences are of working in Social Security. Hi, my name is Eric Rolshelven, founder of Treasure State Retirement Planning. I specialize in retirement income planning, particularly for clients that are closer to retirement or in retirement. For the best advice on retirement income planning, please subscribe to my YouTube channel, hit the notifications bell to be notified when I upload new videos. Here we go, Savvy Social Security Planning, what baby boomers need to know about their retirement income. Next, how can I maximize my benefits? That's always a great question. One of the best things you can do is get your earnings record from your latest Social Security statement, available online at socialsecurity.gov/mystatement or ssa.gov, and get the most recent printout. If the system locks you out because of the security questions, go down to the Social Security office and make sure you get the earnings record. Take a look and see if it's accurate. Take a look at all the years, the top 35 years. Are there any missing years? Are there any zeros? Is there any spot you can improve upon it by working longer? Take a look at the earnings record, because this will be the primary factor determining how much you get and how you can improve your earnings. Then you can apply for Social Security at the optimal time. Consider your income needs now and in the future. Start looking at a possible budget for yourself in a retirement. That's something I always talk to a lot of my clients about. And then be honest about your life expectancy and your spouse's life expectancy. Look at your parents, your grandparents. See how they did. Consider your own health and see where everything is at this point in your life. Be sure to comment in the section below and let me know how you feel about the stories you've heard about Social Security or your personal experience with Social Security. After this video, check out the video I created titled, "What about spousal and survivorship benefits?" The link is in the description below. I'm going to take one time out though first, and I want you to understand the work option here, because we get a lot of confusion here and a lot of questions. Understanding the annual earnings test while you're working. So if you are still working, say at 62, and you want to apply for Social Security before full retirement age of 66 or 67, and you work, the Social Security office will deduct $1 in benefits will be withheld for every $2 you earn over $18,240 in 2020. Now, the reason I emphasize that word withheld is you will get that money back at age 66. So there it is on the next line. Benefit will be adjusted at full retirement age. So even though they withhold the money, this is not a tax. Now, don't let the annual earnings test discourage you from working. Sometimes one of your best strategies might be to continue working in retirement. That's the new pension, because you don't have a pension, so you just keep working. And then lastly, to avoid the earnings test, wait till full retirement age or later to apply for benefits. One of the secrets of not running into some of these problems is to just keep working longer, and Social Security wants you to be retired, to be taking this money. Now, back to the actual taxation of your benefits. Now, here we go. Married filing joint. If you're under $32,000, amount of Social Security tax subject to tax is zero. From $32,000 to $44,000, though, of adjusted gross, they will tax up to 50% of your Social Security married filing joint. And if you are over $44,000 married filing joint, they will tax up to 85% of your Social Security. In the single category, if you're under $25,000, no tax. $25,000 to $34,000 modified adjusted gross, which is the bottom number on the front page year 1040, they'll tax up to 50% of your Social Security. If you're single and you make over $34,000 modified adjusted gross, they'll tax up to 85% of your Social Security. If you file married, separate, and living with a spouse, your provisional income, anything over zero, they'll tax 85%. So that's clearly not the best option to be looking at. So now, Social Security has this formula called provisional income. And there it is on the bottom of the chart. Provisional income equals adjusted gross income plus 1/2 your Social Security benefit plus your tax-exempt interest. That's their formula for provisional income and how you get to this. Ways to minimize taxes on Social Security benefits. Reduce other income with tax advantage investments, but not municipal bonds. So what does that mean? Well, you could put money into annuities or life insurance that have tax deferral in those. And that's another way to keep your modified adjusted gross income down. Anticipate IRA RMDs, which may put you in a higher tax bracket. Now, wait a minute. What are RMDs? That stands for required minimum distribution. So when you turn 72, what the government says is you need to begin taking the money out of your IRA or 401k and drawing that down. Now they want you to pay the tax. So basically, you can maybe enact a strategy here where you start pulling the money before age 72. Say you're not working. Say your income has gone down already. And maybe you consider drawing down the IRAs before 72 so that you're not maximizing the tax, you're minimizing the tax. And you don't pile it all up at the end of your life. Third option, convert IRAs to Roth IRAs. Now, the difference between an IRA is a tax deferral and a Roth IRA is tax-free forever. So if you convert money in a lump sum fashion, and I've done this for a number of clients, it's a way to minimize the amount you have to pull out later, because Roth IRAs, that's kind of your mad money. It's never taxed. It's tax-free forever. But in the conversion, when you go from IRA to Roth, it's a fully taxable event. So you need to consider talking to your accountant or your tax person before you make a move like this. Fourth strategy, delay Social Security, reducing the number of years of benefits that are subject to tax. If you're healthy, you think you're going to go a long time after 83, usually the break even from 62 to 66 is age 83. So if you think you're going to go past 83, then delay taking your Social Security if you're healthy. Another option might be to reduce expenses, pay down debt, and just adopt a simpler lifestyle. I have a lot of clients that do that, and they pare down their home, and they've paid off their home, or they cut down on their expenses. Travel and whatnot may go up, but other expenses may go down. And lastly, continue to manage taxes through retirement. Taxes never go away, and there's some surprises in these Social Security taxation areas that you need to be aware of. Medicare may also shrink your check. If you're receiving Social Security and are 65 and older and enrolled in Medicare, your Part B premium will be deducted from your check. So remember, I told you about the average check in America being about $1,500. Well, first they're going to tax it, and then you have to pay this Part B premium. Part A is the hospital, Part B is the doctor. In 2020, the Part B premium is $144.60 every month. So if you assume, say, a $2,600 primary income amount and an FRA, full retirement age of 67, look at the percentage hit it is. If you claim 60 at 62, you get a 30% reduction. Your benefit would be 70% of the estimate of $1,800. The Part B premium is $144 out of $1,820. That's an 8% hit right there. Now, if you claimed at 67, your benefit would be 100% of the check of your estimated future benefit of $2,600. If you take $144, the Part B premium divided by 2,600, that's only 5.5%. So what's happening is the longer you wait, the less impact the Medicare premiums will have on your net Social Security check. And that's really where it is. And so consider that Part B premium can go higher if you have higher incomes as well. This is just the minimum Part B premium. When to apply for Social Security? These are all key points to remember. If you apply early, your benefit starts lower and stays lower for life. COLAs, cost of living increases, magnify the impact of early or delayed claiming. The longer you live, the more beneficial it is to delay the benefits. Your benefits may be taxed and reduced to cover your Medicare premiums. They certainly will be. Don't let the earnings test discourage you from working. We went through that. They will withhold the money if you work from 62 to 66 or 67, but you will then be adjusted and get that money back slowly over a number of years from 66 and on. And lastly, delaying benefits may give a surviving spouse more income, because the higher benefit you get, then the higher benefit she or he will get later on after you're gone. We know you have questions, and we can help. When should I apply for Social Security? What if I want to keep working? What if I've already applied? How much will my benefit be? How can I coordinate spousal benefits? What's the best long-term strategy for my situation? What do I do next? We know you have these questions, and this is a complicated decision. That's irrevocable lifetime decision. Maybe one of the largest in your lifetime. So don't mess around with this. Social Security is too important for guesswork. Let us help you protect your nest egg and maximize your income in retirement. This is crucial. Request a Social Security analysis meeting. It's a complimentary service. We coordinate with Nationwide Life, and we do a maximization strategy that gives you the top 4 mathematical strategies available to you, so you can see what's best for your personal situation. And it's free. So this is something we do as our initial service, and we need to know what your 30,000-foot view looks like just as well as you do. So this is where we start. We call it first base. If you would like more information on your personal situation with Social Security, click on the link below to apply to become my client. Also, if you like this video, please give it a thumbs up and subscribe to my channel and share it with a friend. Thanks for watching and enhancing your financial scenery.